What's going on, guys? In today's video, we're going to talk about the supports and resistances and how I find trading setups. And I use these setups in order to find several trades within that setup. So basically, the way I trade is in 3 steps. First, I find context. I want to know where we're at as far as long-term charts. Then I find some type of filter that's going to confirm that my trade is in the right direction or that it's functioning. And then I look for triggers. I look for trades, basically. So in today's video, we're going to look at the first step, which is basically the context, finding the setup in order for me to look for trades within that setup. So the setup is useful because it helps me find the direction in which I want to trade a certain pair in the Forex market. So right now we're looking at the New Zealand dollar Canadian, and this is like 30 years of data, so it's quite a bit. But you can see here that we have a very, very big resistance and a big support over here. But what do I do meanwhile? So I zoom in a bit and I'll show you some trades that I took, and basically if you connect these two lows over here, it gives me a support, and here I have an overshoot, and these are my favorite patterns because whenever the price gets back inside of the support that's broken, it leads to explosive results. So now I'm going to reverse engineer this, the process of this setup that I found, and I'll just prove to you that I saw this on October 28th here. I don't usually like to show these, but here it is. So on October 28th, what I saw was that I found that this looked a lot like an accumulation pattern in the form of a reverse head and shoulder, which is nothing more really than lower lows and lower highs that eventually are followed by higher highs and higher lows, and then the neckline is broken. So as I saw this, and I saw accumulation here near the previous support that got broken, and then price got back inside of it, I figured this might be an opportunity to look for longs. So what I do from there is I look on my trading systems and I look for confirmation and things like that. But this is basically about this setup, how to find these setups. So right now, what we see here is price moved up very aggressively. So what do I do from here? So I'm going to move on to the 4-hour chart. Probably daily is going to be fine. So what I see here is that there's some exponentiality. Exponentiality, is that a word? And then it's near this support over there. So that catches my attention. So here there could be a bounce. It doesn't mean that it's going to reverse and go all the way to China, but it might keep going. It might accumulate. It might do all kinds of things from here. But after a long uptrend like this, the chances that we're going to see at least some type of a reversal, maybe until here perhaps, are quite high. So since I'm looking at a daily chart, then there's potential for maybe 100 pips here on a move like this. So I could go on the 1-hour chart and see here we have a small formation here that got broken to the downside. So now what we're seeing is that this is being tested basically by price. So this could be a short opportunity as long as the stop loss is not higher than this high over here. It could also be around here. Yeah, at this point, I think I would put my stop loss somewhere around here because there's a line here of resistance. This is the last swing low. This one, if you put your stop loss here, you have a higher chance of being stopped out. If you put it here and price goes all the way there, you're probably wrong about the trade in the first place. So anyways, all this to say that the way I do this, and I've done videos about this with multiple time frame analysis, is I look for supports and resistances as setups, and then I look for technical analysis patterns as confirmations most of the time. And by doing this, I'm often much quicker than a lot of trading indicators, and that's why I usually use naked charts. And that's how I find my entries. So now we're on the 15-minute chart, so things are a bit clearer. And see, we have rejection here. It looks like this would be the neckline. Sort of. Anyways, this zone here, I could trace a couple lines here, but like this zone was a neckline, so that's the zone of resistance right now. So I could short this and put a stop loss over here, but it's always important to know where the next levels are. So I'm gonna move up here and see if I can find, oh, right here, there's this is a very strong resistance from the looks of it. And these strong resistances can often act as magnets. And that's another type of trade that I do, is the magnet trade, is whenever I'm really close to a strong resistance or support and price is close to it, but not quite there yet, I can use that sometimes to find intraday setups in order to get in until that resistance is reached in that case. But right now I'm seeing rejection, and we are at a previous zone of support and resistance, which would be about here. So that could be a short for a short period of time. But what you can do in this situation is you can open multiple small positions and have one of them that's targeting the nearest support, like here, and then have another one where you protect your entry once price reaches this. For instance, you protect your entry and you just set and forget. You just forget about the position, and you move on to a different opportunity, and you can hold this for days and days and weeks and see if you can make a very, very big move. And that's how you can have risk-free exposure to volatility in the direction in a direction that is favorable to you. And in my opinion, that's the best way to approach Forex. If you're always trading on a 5-minute and 1-minute chart and you're trying to be long and short and long and short in the same day, you're not really filtering out the direction that you want to trade into. So the way I use this, all this to wrap up here, is that I look at supports and resistances to find my setups on long-term charts, weekly or daily, and then I look for a reason to get in as far as a trading pattern, because that's going to determine my risk, basically. Because if I see that this head and shoulder pattern sort of gets broken to the upside, then I know that I'm wrong from this point on. So my risk, oops. So if I get in around here and I have my stop around there, then this is a 1.86 risk reward ratio, which is not a lot. So I'd probably look for another type of target. So perhaps around here. Yeah, 4-to-1 would be a bit better. But yeah, all this to say that that's how I use multiple time frame analysis, and I'll even go sometimes and look at my pivots. So you see here what happened is that the pivots were going higher and higher, and then we were losing momentum between pivots because of this accumulation zone here, and then price got below the pivot over here. So now the zone, we're in a period of least resistance, and price is starting to move lower, and the weekly pivot, which is the red line, could act as a magnet for now that the price is in between the daily pivot and the weekly pivot. Doesn't mean it's going to happen, but these are all things that I consider in order to hold a trade or just wait for confirmations and things like that. So, all right, so that's an example. Another one that I saw. Yeah, that's a trade that I took. I'll show you the analysis real quick. So my analysis here was that we had another type of V-shaped recovery here, and we had two highs. Let me go on the daily. So I took these two highs, I connected them, and that made my support and resistance line. And then I saw that this candlestick had a long wick over here, which is indicative of rejection. And then over here, what happened was that the price got lower than the pivot on the opening. So we had this small pattern that got penetrated and rejected right away. Then there was a battle between the bears and the bulls. And then the bears won, obviously, and then I shorted in that zone. To be transparent, what happened is that I got stopped out of that trade because instead of leaving my stop over here, I've put my stop there and I got rejected over there. But the idea of the trade was really good, and the target for this type of move was the reversion to the mean from that pattern, because I traced that line based off of this support and that one. So I connected them, and as price got lower over here, price penetrated this and then tested it, so it was acting good. And from there, I traced, from these two lines, I traced a middle line, which I call a reversion. Basically, and that was the idea for that trade. It ended up being an unsuccessful trade, but the idea was really good, and the profit ratio was 12-1, so I don't really mind, but it sucks when you know you have the right idea, but it doesn't, you get stopped out. It really sucks, because these type, if you trade like this, if you use weekly and daily supports and resistances, and you have the patience to sit on your hands, you can really make huge profits like this. Look at this. This is a monster move, and you can make, if you pyramid into these type of positions and you sit on your hands, you can make a fortune. So that's what I had for you guys today. So if you learned something from this, hit the like, and I'll see you in the next video.